All right, good morning. Welcome to Forex.Today, the YouTube community of more than 18,000 foreign exchange traders. We're all stationed around the world, boots on the ground everywhere. We're sort of like the Fight Club for the financial markets. So great. Thank you for being here. Thank you for being a subscriber. Thank you for your positive contributions and your positive energy that you bring to our office every single day. So without further ado, let's get on with this thing we call Forex. Let's go. Let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is not indicative of future results. Therefore, please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma, my name is Wayne. Once again, thank you for being here. Just so you know, down in the chat, there is a poll. What do you want to start with today? Euro dollar, Aussie dollar, USD CAD, USD yen. I'm interested in what's on your mind. Please fill that out. So the reason we are here today is not for me to put you into trades, tell you what to do, manage your money, take care of your family for you. No, instead, what I'm here to do is teach. I preach to teach, because some of you never had this. Yeah, teach what, Wayne? Well, some macroeconomics, some fundamental analysis, maybe some technical analysis. But you take all this and you put it together in a combination, and what we call that is trade planning. So we are going to look at what's happening now, how that, how that is related to what we did yesterday. But ultimately, you need to be thinking now, next week. You should already be in today's trades, and you're thinking about the next trades. We call that future planning, Futurama. So anyways, I'm here to teach you some of those skills. Okay. Johnny said, hey, I was surprised you put USD yen on the poll. Oh, it was a trick question. Okay. It was a trick question, Johnny. So anyways, look, technical analysis, fundamental analysis, even just bias and all this kind of stuff. Ultimately, you take all of that, but then you have to add all of that to the now. Is the market bullish now? Is the market bearish now? And so we will look at that and try to align those things for congruency. I'd like to thank Traders Way for being a part of the community. You're a trader, they're a broker. Maybe there's an opportunity to have a symbiotic relationship. You want a broker that has fast execution speed, narrow spreads, big swaps, decent customer service, maybe even world-class customer service. That'd be great. What are they looking for? You have a heartbeat and you have money in your account. And you trade. Hey, but whatever. But the thing is, here that was being a little facetious, but here's what they really want. There's kind of like, I don't know, there's probably two kinds of clients in the world, right? There's ones that pop in $500, piss around for a while, blow up the $500 and go away and do something else. That's expensive for everybody, okay? There's no money in that for a broker, and that obviously losing is just a big waste of time for everybody. So, the business model works better if the trader can trade profitably. Okay? You think about that. It's better for the broker if you trade every day for the next 5 to 10 or 15 or 20 years. Every day you place a few trades. Some of them fail. Some of them break even. Some of them are profitable. Your winners are much bigger than your losers. and you continue doing this process for years. Meanwhile, they continue executing your trades for years, and it's a much better business model. Okay? That's what they would like. So they would like 1,000,000 profitable traders. Okay? Wouldn't that be great? So anyways, how do you get there? Perhaps it's education. So that's why I'm here. So anyways, visit tradersway.com and open up a demo account. Throughout today, you'll get an hour, hour and a half of my life. Make sure you ask questions and write these things down. Please click the like button. And also at the end, when you're done taking all your notes, I highly recommend that on the recording of this video, in the comment section, you document your notes. Therefore, you can search your notes on YouTube and you can find very specific specific videos where I cover the one thing that you're maybe quite interested in. So what day did I cover the reverse repo market? Wouldn't it be great if you just went into the back office of YouTube, right, into your YouTube account and said, reverse repo market, and it pulls up from the comments, like when, right? And what you do is you document that in that video. Today, Wayne talked about reverse repo market, and I think this is one that I should save. Great. So now you can go into your YouTube account and go, where, search your comments and say reverse repo market. It pulls up the video in which you left that comment. And now you got the exact video. Maybe even leave yourself a timestamp. When do I actually start talking about the reverse repo market? So imagine 4 years from now, it comes up again. There's problems in the reverse repo market. And you're like, oh, I remember Wayne covered that 4 years ago, 5 years ago, 6, I can't remember. You do a quick search in YouTube, boom, there it is. So I highly recommend you do that. That's what the Wayne would do. All right, so let's wrap up this poll. Is there anyone left? Anyone else going to finish the poll? Anybody? 5, 4, 3, 2, 1. Done. Great. F. Friend says, hey, Aussie USD looks more promising for a retracement or correction on the bullish side. Cool. Doesn't matter. We're here to watch it, to prepare for it. Okay? All right, cool. So most people want to do euro dollar and then USD CAD. All right. Euro dollar, we are below the monthly. Okay? Below the monthly. The gray area is the monthly projected bottom based on this top. And we're also on the weekly projected bottom based on this top. Can you see it? Okay, let me get my pen. By the way, we had an amazing time last night in the swing trading group. Our meeting was almost 3 hours, but it was great. I had an awesome time. So thank you to the swing traders. Okay. So this move predicts that. This move predicts that. And of course, both are correct. You see that? So both, this is a position swing. Okay, this is a weekly swing. Okay. And the question is that enough? Is that done? Okay. Is that right, Johnny? Huh. Huh, that's strange. It did take a very, very, very long time to download and encode and upload. So there was something, it's almost a gig. It took, right? But anyways, so maybe it was corrupt or something. I don't know. That's interesting. Maybe I'll have to redo it. Oh, Oh, Peccary watched it. It's all good, Johnny. All right, so here's the big question. And someone else said, hey, Aussie dollar looks good for maybe some up. All right. Well, this would need to go up as well. And what we need to do is use technical analysis to confirm that hypothesis. Okay. Okay. So what would the first thing you'd want to see is some green candles, obviously, but we have to, let's say, one, breach the 21 EMA. Okay. On a 4-hour. You could do it on smaller time frames too. But you also, to do that, it would also create the higher high. So we got to get above here. So if you were going to be a bull, you'd want to see this, I think. Okay. So the more important thing is that you're ready to observe it. Not that you're going to bet it's going to happen. Just be patient. Let it happen. Then be aggressive. Okay? Cool. So that's the first one. The second one is Gary's trade. Gary's here. This is Gary's trade. Breach above here. But the real one that Gary and his group pointed out, and I think it was Joe's group as well, really made a big stink about this 130 area, which is actually a little higher than this. It's in here, huh? So let's just leave it there. So there's a confluence here on multiple levels going back years, using monthly pivots, using weekly pivots and all that kind of stuff. And of course, it's a psych level. So both those groups agreed that this was an important area, okay, as resistance for multiple reasons. Now, the best thing about that is Gary's group and Joe's group had different opinions. I think that was group 2 and group 5. One was much more favoring, CAD moving quite higher above 130. And the other group was, 80% chance this comes down off of 130. That's what I love about traders. Both could be justified. The thing is, you now need to do it. So the bullish team would not be shocked if we get a move down off of this, but what they would probably look for is the rally up and the breach. And of course, the breach higher is important for everybody, because if Joe's team now, right, shorted here, the last thing they want is a higher high above that area, right? And so what we talked about is the impact of that. Let's just say Gary's group is right, more right, longer term right. Joe's team is shorter term right, so they sold here and get to about here. Where would they put their stops? Stop, 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 right? Depending on the trader. So if it does this, imagine the liftoff Gary's team would get by not just more bulls getting in, because I don't think more bulls would get in, but bears would get out, a lot of them, because of the technical analysis we've done. Bulls and bears agree 130 is a key point in the price time continuum. Okay? Cool. All right. So what's going on here? I did some scalping last night, and it broke on a 5-minute chart. I can't go that far back. Maybe I can. But at least you can recognize what this is from our trade plan yesterday. Do you remember we talked about, only a fool would buy it here? You're like, well, Wayne, that's where you bought it. Well, okay, maybe I'm a fool. But it was the price action. So it was here, but I didn't buy it here. Okay, I didn't buy it here. I bought it here. There's a big difference. Okay. And then I bought it here. And then we were in the swing trading group, and I missed this one because I was listening to people's trade plans, but I would have grabbed it there. And of course, if I stayed all night, you're right, then there's a trade in here, there's a trade in here, there's a trade in here. So the only one thing I could kind of give you with this is that I took 2 scalps, and once you were able to move your stop to break even, which was, I took these on a 5-minute chart, by the way. I was able to move my stop to break even, I don't know, within an hour. And both trades are up over 100 pips right now. And the cool thing, like scalping, up, 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 down, down, buy, exit, buy, exit, buy, exit, buy, exit. It's so hard work, and you have to be so precise that it may not actually be worth the money. But the interesting thing about trading, especially if I just had 2 teams, by the way, 2 teams of about 8 people, so 15 to 16 people got together, smashed their minds together and said, well, the key number here is 130. So it gives me the focus to stay in these trades until then, so that my scalps are now worth 100 pips per scalp. But the thing is, if I was truly scalping, if I had continued through Asia, for example, and all night, I could have got, this pullback, this pullback, this pullback, this pullback, this pullback, this pullback. And you're like, but how do you know to do all that? Well, that's just price action. Okay, that's just price action. There's nothing complicated here. The big question, though, is should I get out up here? And the answer is probably yes. But I just want to show you how, you could casually scalp 200 pips. And by casually, I mean make a basic trade, jam your stop, and just let it do its thing. And we can see on this time frame, for example, it's been bullish for days. So it's not overly complicated. Okay. Cool, right? Zephyrin says, yeah, USD CAD looks so good for a fall. Yeah, we'll wait for the fall. Okay. So I understand that. I want USD CAD to fall. I hope everyone understands that. So I'm looking at this on, any time frame, but this is a 30-minute. I look at this and I say, are these the market conditions I want for selling? The answer is no. But we do know this is a bullish exit, right? So could this be the fall? Yeah, it could be. Yep. Yep, could be. But our job is to say, when has it reversed? Not that it's going to. It's a big difference. So for example, I probably need the 21 to roll over over the 55. Which means it could be a 150 pip drop before I'm even a bear on this time frame, but I would look for something like this. Okay? So, right? And here's the trick, because this could take a week, it's a couple hundred pips maybe. The thing is, as a seller now, if you're in the first wave, you're in here, sell, 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 sell. But very often you give back on this pullback because you're still selling, and then these are getting knocked out for break even or loss, and maybe you give up hope and all that kind of stuff, and you talk yourself out of the real move. Okay. this first move down is bulls getting knocked out. The ones that were too weak, too slow, and undisciplined to exit when they were supposed to, okay, we're taking them out. Bears are hunting their stops. Okay? But that's short term. That's a vol trade. That's a style of vol. It's a counter trend trade. This is a trend trade, and these guys are in it to win it. So none of that has occurred, although we're in the right place for these things to start happening. So stop hunting maybe today. Okay? Maybe there's some discussion, quote unquote, choppiness on Monday. But if this all happens by Tuesday, someone will be selling 128.50 hard and taking this down for the entire month. Okay? Because we're, 1 month away to the Fed meeting? I mean, a little bit less than that, but you get it? Like, they're going to say, well, down until the Fed, and then we'll see what the Fed does. Okay? Bulls are thinking the opposite. Okay, great. So pick a team. But we all agree, both teams, bullish teams and bearish teams, agree that the area that we're at now is important. Okay? Cool. Can I get a like? Was that clearly explained? Was that beneficial? Was that helpful? I'm trying to also show you that you can scalp, but if you add a little more alpha to your scalping, meaning a bias based on fundamentals, you're instead of going for 20 pips on a scalp, you can go for 100 or more. Still trading a 5-minute chart. Okay, these are all taken on 5-minute charts. I don't think I can go back that far. But look, see, dude, seriously, look at this. That's hot. That's hot. Okay, that's the trade, not the break, the pullback. And that's what we talked about yesterday. I asked you guys, should you buy it here? And everyone said no. And I said, I agree. Only a fool would buy it there. But I'd buy it here. And the interesting thing is it's the same price, but it's completely different. Okay. And of course, I was going to trade this, and I would have traded these. You can compound. So this is, 100, right? This could have been a 400 or 500 pip day. And it's just pissy little scalps. Okay? That's a good month for a lot of people. All right. So, what do we see? Okay, I find this statistically important or relevant. Okay, that we are here. Okay, doesn't mean I buy it, but it's relevant. I would expect bears to start taking some profit. Okay. Oh, thank you, El Pastor. Oh, I didn't mean to do that one. I meant to do this one. Hey-oh, listen what I say. Oh. What's the difference between this price action indicator and double standard deviation channels, one standard deviation and two? Well, one is measuring volatility, okay? And the other is more of a standard deviation. But you're saying double standard deviation channels. I don't know. Then they're probably the same. I don't know. Look, there's a million tools. It don't matter. So if you're using a standard deviation channel tool, it'd probably work the same. But yeah, I don't think I have such a thing. Do I? No. No. Well, that'll work fine. Okay. Mine's prettier. I was thinking 2 Bali bands, right? But anyways. So, yeah, so that is not bullish. So I either sell or, right, or I get out of the way. And I don't like selling down here. So I'm going to do my best to not lose money. Yeah, Baker, we had a great time in New York. Yeah, Cisco's hung out at the Harvard Club almost as much as I have. He's like, this place? Oh, this place again? Oh, Madison Cisco told you all about it. Yeah, right on, man. Yeah. Pound dollar. Yeah, we can do pig dog. You know, it was interesting with pig dog is I scalped this and then got out. And then I came back and I'm like, holy shit. Oh, I'm like, oh man, pound was strong there for a bit. And I think I took it here on the dollar, but also on the yen. And it was great. It was great. It worked out fine. I'm like, oh, wow, the pound's really strong. And then I walked away from it and stuff. And then I'm like, what the hell is that? So, yeah, so that's a big move. You can see statistically not expected, or at least much different from the week before. So maybe this is that third week syndrome, right? So look, what do I need to do? Okay, I have to decide, am I a buyer? Am I a seller? I'm a little concerned about this bottom. I'm very interested next week too, by the way. I'm very interested in next week. I may not even consider trading today. I'm just too consumed with what might be, right? Like, this might be the end, right? The end of the road, 'cause I can't let go. Fundamentally, right? You belong to me. Anyways, I'm just so eager for next week. I like, what's my choice? I can sell this. I don't know, man. I just don't know, right? Like, is that the Jim Morrison version, Johnny? This is the end. I was doing the Boys Men version, but you know, I like Casey and JoJo. they were a little more street. Right? So I'm really now, I feel like the soldier, that's ready to go into battle. He's all jazzed up and he's just sweating and nervous and psyched at the same time. I'm like, I don't know, the calm before the storm, but like, I can't really sell it here today. Look, if I was a seller in there, it would have been great. The breach would have been great, right? That's a break, pullback, that kind of stuff. That's all good, but that doesn't exist now. So what is going to happen? This? Well, then that's a range trade. So maybe I'll sell it at 37, but dude, we're at 36. Do I want to sell just a few pips off of 36? Like, no, but I can do what I did on the USD CAD. I can't sell it here, but I could sell it there. And you're like, wait, that's the same price. Yeah, but significantly different risk. Okay. Robin, I don't want to do exotics and peso. Like, traditionally, it's too early in the month to do peso. But if we're like, my worry, Robin, is that I'm trying to teach seasonality, and there's a dollar focus on that. But I don't want to get people betting on seasonality, but also throwing that in so that they're buying everything and all that kind of stuff. Like, it's too aggressive in this community, right? In a wide open, the entire world, amateur traders are here, like, to protect the innocent and the simple-minded. I just don't want to go there. Okay, it's just too aggressive for this audience. Okay, but you're not likely to get much move unless the dollar specifically weakens, right? Okay. Aussie and Kiwi are affected by the shutdowns, right? So what do we know here? What do we know? Like, what would I do here if I were me? Well, let's go back to what do we know? This top predicts 0.7099, so 0.71. That's what we knew 20 days ago. 20 days ago, our math said not 71.50, but 70.99. And we're at 71.25. And we've actually been lower. We've been more like 71.10. The 20-day prediction worked perfectly. So what do I do here? Do I sell it? No. It'd be terrible. Delbeer says, hey, Wayne, it's gotten easier to become patient with my trades over the years that I've followed you. Patience is so important, isn't it? Well, congratulations. I'm glad you're there, because when you learn patience, you actually expel stress. Okay? The more patience you have, the less stress you have. Okay? So that's quite a victory. So congrats. So I have choices here now. I can just buy this. That's a counter trend trade and a bet. You can do it, of course. It's just a different mentality. Just understand you are betting against the entire market. And of course, the entire market is correct. So you can do the counter trend trade, but in this moment, you are not correct. Doesn't mean you won't profit. See, some of you guys think like a winning trade is good and a losing trade is bad. That is not necessarily true. You could be stupid here and make money. Not that that's stupid, but you could and still make money. And you could do the right thing and still lose money. Okay? So anyways, so you have to separate all that. These are just trades. So if you take this trade, remember what the technical analysis is suggesting is when you hit the 21, it's going to push some downward pressure, probably create a double bottom. But then from there, if it makes a higher high off to 55, it's likely to make a higher low, which we also call a roll reversal, which is also a Fibonacci. Okay? And then an Elliott wave guy would say, ooh, expansion wave after that, up to the 200. Oh, for sure. But now you're going to hit this. And then I think you're going to have a bigger pullback all the way back. And then maybe seasonality kicks in and we have all of that. So like all of a sudden there's, a half a day up, a half a day down, one whole day up, a half a day down, 2 whole days up, 3 days down, 2 weeks up. And all of a sudden, whoa, there's a lot going on there. Well, just make sure you understand all of that before you say, should I buy this? Well, you should understand all the moves and counter moves. Okay? I know a chess guy that can tell you entire games based on your first move. Which pawn you move, right? Okay, you move that too, and he's like, okay, I can tell you the rest of the game. Unless you make a mistake, then he will win. But if you do what you're supposed to do, right? So here's the board, right? I don't know how many is on the board, right? Anyways, just imagine this, okay? Right, and then here's your side. And there's entire rows, right? So there's, I don't know, like this, and then there's another row here, right? And just go with me here. Stay with me, Goose, right? And so you say, okay, I get the first move. You move your pawn here. He can tell you the rest of the game. Because based on that move, he understands what your strategy from there on is going to be. And so then he will do his move, which is obviously this is like from game theory, right? Well, if you're going to do that, then he has to counter that. So then he'll do this, which means then you will do that, which means he will do this, which means you will do that. And then he will do this. And now you'll have multiple choices, but based on the strategy, he'll probably do this one. So therefore your next move after that would be that. And all of a sudden you just know the whole game. You just know the whole game. And so he was telling me, this was way back in the 90s, right? But he was telling me when he was a kid with his brother, they shared a bedroom and they both shared a love for chess. And mom would always come in and yell at them, go to bed. So they would go to bed. And then the mom would come in and find out that they have woken up. They waited for mom to go to bed and mom and dad to go to bed. And then they would get out, turn the lights on and play chess. So mom would wake up at midnight and here's these, 12-year-old kids like, turn that light off, go to bed, right? So then what they would do is lay in bed in the dark, calling out the moves just into the room. And they can visualize the board. Okay, it made them better players because you moved this to that, but you'd have to remember all the moves. But after a while, you'd memorize the strategies where, okay, if he does that, there's it's a certain type of strategy and he's going to try to do this, 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 and this, and all these things would move. So you could actually, in your mind, remember the entire board, okay? I don't think trading is that dissimilar. You have bulls and bears. Both use technical analysis. So you should be able to play both sides of the game. And if you can, then you can plan very well. Meaning, should a bear sell here? I mean, a bear can do whatever they want, but should they sell at 71? No. Okay, so some will exit. That will create green candles, especially if there's counter trenders here. But once you get to this level, okay, there's going to be downward pressure. Bears are going to try again. But there's not enough bears, so now it's going to come this way. Then it's got to go that way. Okay? And at some point, maybe when you're up here on Monday, if these bears are still in the market, they're going to sell hard and drop this like a ton of bricks, and we're going to head down below 70. Okay? So that would be your plan. So you're like, okay, I exit here, and by Friday afternoon or Monday morning, I'm selling here, and we're on our way to 0.682 or something, right? But if that doesn't work, if the bulls win, how will that go down? Well, this will happen, that will happen, this will happen, that will happen, this will happen, that would happen, this would happen, and that would happen. Because you already know what a bull would do, even if you're a bear. These are all rules of engagement. Dude, this is a front run. This is the Monday sell. Well, that's what you would do if you were a bear. A bull tried here, and a bull exited here. Bears exited here. That's why it trickled up. And what happened next? The bear sold again on the exact price at the exact day of the week. Like, son of a gun, what do you expect? Okay? So when a bull sees this, maybe you put a pissy little trade here, but you know if that drips below, you're gone, you're out of the way, and of course that creates this big move. It's not bears entering, it's bulls exiting. Half of this move is bulls getting out because a bull only had this price. That was it. There was only one move in August. And I teach you that it's likely to happen at that moment in time. So at that moment in time, you're like, oh, I'm going to buy that. Great. Where's your stop? You were done in the first hour of the week. The first hour of the month, you were done. You bought it. You dropped a stop. What happened next? You got stopped out and bears made money. Okay. Maybe up here, you moved your stop closer so you wouldn't lose so much because you saw the vulnerability. And your vulnerability is clearly here. Oh my God, bears. See, you bought here, but bears definitely sold there. And you're like, oh my God, that's the big number. Someone is really selling at 74. Like, that's an aggressive sell. You're like, oh, I'm going to move my stop. Okay. And then boom, bears are winners. But bears are exiting now. They're putting money in their pocket. So now we've got to play the game again. The only thing is we have a bull not only has to buy low, but we have to reverse the entire market. Well, dude, that's not going to happen today. That's not going to happen tomorrow. It might take all of next week to pull that together. But the thing is to know to be conservative, okay, and then turn aggressive. Okay? Right now, this is a bearish market. Look, they sold here. Here's the exit zone. Okay, they sold here. Here's the exit zone. They sold here. There's the exit zone. Like, there's no problem. You see that, guys? You see? Perfect. Perfectly bearish. Perfect. Easy if you're a bear. Okay? Easy if you were a bear. However, was it a good idea to sell in here? Well, you made money for a couple of days, but you might have given it all back. Okay? Was it a good idea to sell here? Is it a good idea now to sell here? No. If I were me, I'd sell at 72.22. I need this to go up 100 pips. That's where these guys come in, by the way. Counter trend traders. Counter trend. Look, you must assume it's going to happen. And then also be prepared to sell after it's gone up 100 pips. Exit. Be prepared to let it go up 100 pips, then sell it. So like if you sell now, I don't know what's going to happen next, but I think if it goes up 100 pips, I'm going to sell it. And if it goes up more or double bottoms, higher high, higher low, then I'm going to be very interested in how that's different because it might look like this, okay? But September is not July. And I know that, and I will plan that in my strategy. Mohammed says, why I have many haters? I have haters? How do I have haters if I don't hate other people? It's kind of strange. It's like a one-way feud. Wow. Thank you, Al Pastor. Right, unmerciful bliss. That's what I'm saying here, right? Like, green doesn't mean buy. You have to understand that. Okay? And I was very clear, and I spent a lot of time thinking about this when I wrote my book. A lot of time. And that's why I named it the Pivot Profit Zone. Okay? Green does mean up in many cultures, not in Japan, but in many cultures, green means up and red means down. But what this really means in the context of the trend is, countering the downward pressure. Like, it's more like a floor on the short run. Okay? So, for example, in a bearish market, you're never likely to hit red. And if you are, you're probably not in a bearish market anymore. So red doesn't mean if you were a bear, sell here. And green doesn't mean if you were a bull, buy here. So for you to fully understand all of that, I'd go through the training course. There's day trading course. There's the swing trading course. There's the original FX Bootcamp training course. There's multiple courses in which we cover this in great detail. Okay. But it definitely means on the short run, you should probably stop selling. Now, this one went lower than that, but at the end of the month, we were back there anyways. So I would always argue, if you exited and just stopped trading here, you would have just been fine and you would have sold here anyways. And the thing is, when you're not in the market, you're likely to lose less money because you're not in the market. So you're not stressing either, right? You're not stressing at all. So you're all relaxed, you're all chill, you're getting ready for the next trade. Yeah, I could have made a little bit more money, but you know what? You wouldn't have got out down there anyways. So I'd rather maintain the discipline. And the discipline is just simply to get out because you're supposed to get out. And on the long run, you'll be better off. Mohammed says, maybe because I provide better knowledge than other gurus? I don't know about that. You wouldn't hate me for that. They might hate me. I doubt that, though. They're so busy doing their thing. They don't care about me. Okay. So I would look at this and say the probability of it going lower today is challenged. And you should be careful, right? When was the sell confirmed? Oops. Okay. Well, look, the most important parts of this is the strategy. Okay. So you should know as a bear, okay, A, you're a bear, but B, you have to know how to swing. Okay. It's just like, if you don't understand this part, there's nothing else to talk about. Okay. Now, using other techniques, you could use price action for your entry. 5A crosses are a classic one for entries. Oscillators are also very classic for entries. Limit orders, just dropping a limit order could be enough because at least you're in at the right prices. Okay. Now, you wouldn't be trading on a 4-hour, you'd be planning on a 4-hour. So, for example, in here, we know, like, let me do this, okay? Bears know that that's the sell zone, okay? and they knew it down here. So now the question is, when do you sell? Well, you want to, right? One of the things I teach is like this time zone is absolutely critical. Okay? Absolutely critical. So now you know the price and the time in which you really want to sell. So that in of that now, that's crazy important, right? That you have a price in which you want to sell, two prices actually, and a time when you are ready, willing, and able to take the short. So now you're asking, so Wayne, when, where are we? Is this it? Okay. So here's that zone. Okay. You want to short 76. Okay. So we call this a front run. We meaning the swing trading group. Okay. But this is a place where a bull would want to buy. So bulls would have bought it in here and bears would have waited. They might have had a sell order here or at 76, and there's another one above us. So this would be plan A for bears. This is the front run. It's unnecessary, but tradable. Okay. This is the bullish buy. It's the only one there. There was no other choice. Do you understand? Like if you know how to swing trade, you would buy here. The stop's already pre-designed, so you know where that goes. And sure enough, okay, it started to look good for a while. It doesn't put you on the free and clear plan, but it does allow you to move your stop. Okay, so bulls know specifically right there, they buy it. Okay, bears are like, oof, that's out of position. So somewhere around this pivot point and this psych level, we're going to call this plan A. And you're going to take it down, right? That predicts S2. So if you sell in there and it holds, because remember, plan B is way up here somewhere. So if plan A works, you're going for S2. Okay? So now your question to me is, when do you pull the trigger in here? And that would be like my question back to you. If you had this level of planning, what would make you pull the trigger? If you were sitting there going, it's gonna turn red, it's gonna turn red, it's gonna turn red. On a 15-minute chart, on a 5-minute chart, like at what point do you decide? There's no right answer because 10 traders will take it at slightly different times. Okay? And to me, it doesn't even matter. That's not the right one now. Okay, to me, that's not the one that matters. There we go. Okay, this is on a 5-minute chart now. What matters is that you do it. And I don't think you can do it if you don't have plan A. If you don't have plan A, forget it. You're not going to be able to trade successfully, at least using my techniques. You don't get it. You're not thinking ahead. You're just a lost cause. You're not using technical analysis and you have no bias. So like, dude, it's hopeless. Okay. Okay. That right now, the next part is, do you sell the 5A cross here? Oh my God, that's aggressive, but someone will do it. Okay. This technically now says bearish, but this is the role reversal. You see that? So what happens is you're sitting here watching it go up and you waited days for it to get to your plan A. That's patience. That's discipline. And then you say, now that we're at my plan A, I expect to see some down. So what do you do when it does that? How do you react? How do you react to a lower low? Well, what you're supposed to do is this. And you would sell. Here. Standard operating procedure. So, ultimately, it doesn't matter. There isn't levels of goodness and badness. They all have different risks. Okay. This is really aggressive. This is basic standard procedure. This, I think you're going to find gets a little ugly because by the time you're in, you're here and you'll make money and then it'll go all the way back to break even. And if you trade with fear, you probably jam your stop and you'll get nothing and all that kind of stuff. So I think you either need to be super aggressive or super patient. Okay. I don't really care which one. It'll end up being one more trade than the other trader, but it doesn't matter. But the thing is, if you don't have plan A, forget it. You're not clued in. You're just not on the clue train. Now it's just wandering in a hopeless night. Okay. All you had to do was be a bear and swing trade. Now you can say, well, Wayne, I wasn't a bear. Oh, well, you had a couple of shots from a bullish point of view. Okay, it's too bad you were only profitable for an entire week, but then it all collapsed and went against you. So hopefully you made some money. We call that shooting at rabbits. Okay, but in this case, bears were better off. Cool. So if you were a bear, you did pretty well for 2 or 3 months in a row. If you're a bull, it was challenging, but you picked up some pips and you got through the month and now you're really waiting for a change in trend and maybe it's the bull's turn for the next 3 months. I think September is going to be challenging. I think it's neutral. I think there's going to be big downs and big ups. And at the end of September, we're probably right where we are now. Okay. I'm mentally and emotionally prepared for that. And I'm hoping for a good October. And I'm going to try not to lose a whole bunch of money in September. Okay. Mohammed says, Wayne, I was in an argument for the importance of the 89 moving average over any other period in the currency market. Does it matter? No. No, it does not. I use a combination of short term, okay, and longer term. Not long term, but longer term. And they're two separate things to me. One is price. One is market. Okay, so if I use 5.8 and down here 21.55, and then for trend, longest, okay, that represents trend. I use 200. If you go in here somewhere between the 55 and 200, so you're using 89, you're doing a combination of pulling the market out a bit and pulling in the trend, and kind of gives you the same. The thing is you're separating, okay? So I use the 5.8, okay? Again, 5.8 is price action. Okay? 21.55 is market forces. Okay? So I'm separating price, what's happening in the moment, from the market, what's happening in general. We could be in a bearish market, but price is going up. Is that relevant? Yep. So I wait. But then when price decides to head down in a bearish market, I fire for effect. I sell like a crazy man. Mohammed says, but I heard 89 use, I couldn't care less. Okay. Now Grind says 200 is fair market value. Correct. I also identified that as trend. So there's a few things that are at fair market value right now, one of them being oil. And I'm not bullish or bearish. I think oil's fairly priced. It won't last that long. at the fair market value, but that's what it is now. Okay. So honestly, are these the magic numbers? Well, they're logical numbers. And if you ever look at multiple time frame analysis, you'll say, oh, son of a biatch, these numbers are not random numbers. And you're like, wow, that was kind of smart what he did. Well, okay, great. But ultimately, if you, right, like in the very beginning, I used 2060, I think. I only used 21 and 55 because they're Fibonacci numbers, and it worked just as well. But it doesn't matter. But if I traded an 1840, how about an 18 and 44? I would make money. Okay, if it was 2550 or 2589. 5589, how about that? I'll trade the 5589. Well, really what I'm doing is I'm combining market over trend. Can I make money? Yeah, totally. The thing is, like I said, if you can't do plan A, everything else is just gobbledygook. I don't care what indicator you use. Okay? If you don't get that, you don't get it. You don't understand how the market works. You're so focused on the math. You're so focused on the indicator. You're so focused on this has to do that, and then this has to do that, and then this has to do it. You're so mechanical that you can't even see reality. That would be the challenge I would focus on. How do I see reality? Okay? Okay, so you want to see reality is the first one. But like, I don't care. And let's say you delete all of this. And I did this the other day, and it would work fine. Okay? So I'm trying to get you not reliant on these algorithms, because they don't matter that much, okay? You should be able to trade and make money this way. I don't even know what these are. I can look at them again. It doesn't even matter. Because you have to understand how money moves. It's called, like, okay, what's another way of saying money moves? Okay, you have to understand how money moves. What's another word for money? Cash. What's another word for moves? Flow. For this, you need to understand why it's moving, aka the US bond market, and how it moves. If you don't get that, then I don't care what indicator you use. You're just not doing the right things in the right way. But if you understand how money moves, I don't really care what indicator you use. You'll probably do just fine. But the thing is, what I did is in the beginning, I used a lot of indicators, and then I scaled back because I realized I didn't need to rely on what the indicator was telling me. I realized I can change the indicator so it told me the stuff I wanted to know so that I can make a decision. So maybe the first 1 or 2 years of trading, I thought the indicators would tell me what to do. And after 1 or 2 years of frustration, I realized they don't tell me what to do. So then I thought, well, what is it that I want to know? And that right then you can see there was a revelation, a massive breakthrough. Well, what is it that I want to know? If the indicators aren't telling me what I need to know, well, what do I think I need to know? And then what indicators might tell me, and under what circumstances, like what numbers would give me that knowledge. And now you'll see why I speed up my stochastics and slow down my MACD, because then I taught myself what the algorithm is actually doing mathematically for statistics, and what the algorithm is doing mathematically in MACD. And then I said, oh, well, that's interesting. So so if the stochastics is looking at the highs and lows of the recent candles, how many candles for price would I want to measure? And I start thinking, ooh, that's interesting, because now I'm like, just because stochastics rolls over doesn't mean I want to sell it, but I want to identify what kind of a rollover and how sensitive it is. And because I don't want all the rollovers, I have to then say, well, there's going to be general market forces up. So I don't really care about stochastics coming down in an uptrend. I want it going up in an uptrend. So I'm like, well, so there's price, and then I have to go to market. So what do I want to use for market? How do I measure market? How does MACD work, right? The moving average, convergence, divergence, identity. Like, what is the math doing? And then how can I change the variables of the math to give me the information I need so I can produce the outcome I want? And all of a sudden, like, oh my gosh. Okay. So Muhammad says, why do I use the 2155 and why not just the 21? Because there's a couple of things going on. One of them is, I guess I'll put this back now. Let's do it this way. Template, classic. Okay. Okay. Why not just use the 21? The 21 is telling me that the market is bearish. Well, the 21 is below the 55. That's right. Let's do this again. The 21 is below the 55. So I am bearish. Cannot be bullish. I'm a bear. It's done by definition. Now, I might personally be a bull, but the market is not bullish. The market is technically bearish by definition, not my opinion. So I look at it and I'm like, well, I can't buy this. Okay, that's the first step. The second one is, why not just use one EMA? Well, this is statistically important to me. Okay, see, when the price is below 21, I'm bearish and I'm ass-kicking aggressive. I'm crazy aggressive. I'm looking to sell and sell hard. Now, when we breach the 21 and go back to the 55, I'm still a bear, but I'm significantly more conservative. And that predicts a massive slowdown in bearishness. And you can see that just on this random currency, on this random time frame, it told me the right thing. Sell hard, be careful. Okay? Okay? And this is neutrality. Which means if we're doing this, I should probably not be in the market. I should probably have already taken profit. Okay? Now, if I threw down here that this was a pivot profit zone, dude, you've already would have been out. And that's what creates this move back to the fair market value. So why do I use two? Aggression, conservativeness, but both of these combined tell me I'm a bear. Okay? So that's one isn't enough. Okay? More is better. How about this? Okay? You can look at it this way now. Red, hot, aggressive, cold, 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 hot, 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 cool, 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 oh, cold, 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 colder, cold, 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 ice cold. Okay? Maybe that works better for you. Okay? You can see the rollover down, 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 up, sell, 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 down, 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 up, sell, 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 down, 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 up. Okay, and you're watching this, but right now you're like, oh my God, what the heck happened to this move? Things are ice cold. You might still be a bear, but you have serious concerns. Okay, I look in here and I see, well, okay, 21.55. 21. Okay, heading back. Okay. Okay, but I spend a lot of time separating price action from market forces. Okay, I told you that I use the 5/8 for price, 21.55 for market. What else do I use to separate price from market? Okay, I use EMAs. What else do I use? Oscillators. Okay, both, right? This is stochastics. This is MACD. The third one. Okay. Well, again, pivot points is one. Pivot points is market, because it looks at what happened in the previous period, open, high, low, and close, and tries to predict the next period. So it's like, that's a market issue. Price action. That's where you say double top, double bottom. Okay, you're using what price used to be to predict a bottom or a top. Okay, you're finding support and resistance because of previous prices, or you're using what happened in the last market, not prices per se, but open, high, low, and close. So you're doing calculations and really doing standard deviation and weighted average analysis, and you're creating support and resistance based on what the market did in the last period. Okay, MACD is slowing down, okay, to represent the market in general. Stochastics is sped up for price action in the moment, and of course the 5/8 is used for price and 21.55 for market, right? So so you have price and pivots. I don't know what to call that, but anyways, dynamic levels or whatever. Okay, so I'm using all kinds of tools to say, what is the market doing? Oh, look, the market's bearish, so I should not be a bull. Done. What's the problem? Oh, I don't have that kind of patience. Well, good luck to you then. Okay. But imagine I was a bull and the market started going up and looked like this. Well, I'd be trading. If I'm a bear, I'm trading. I'm a little concerned that we're up in the purple zone. It's cooled off quite a bit. So I have to kind of wait for it to give me some other indication that it's ready. Well, what about an oscillator? Now, what about Stokes that goes like this? Well, I have to understand the math behind the Stokes and then put it in the context of these market conditions, which you could use just this setup on your chart, or you could use MACD, or you could use moving averages, but you say, all right, I'm still a bear. And when Stokes rolls over, that confirms the new move to the downside. Now you're back in the game. Okay. So you're not selling on the way up, you're selling on the way down. Not selling on the way up, you're selling on the way down. And your oscillator, for example, your stochastics would be going up here. If you understand the math, you can just look at that and draw the stochastics. It's not complicated. So you're like, well, the Stokes is going up here, but it's definitely coming down here. Sell! Why do you sell? It's bearish. Why do you need 9 reasons to sell a bearish market? Dude, your oscillator rolled over. You're a bear. Sell it. What's the problem? Oh, well, I'm counting the waves or something. Dude, just sell it. Okay. 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 Kind of looks like a top. Kind of looks like a sell to me. Okay. What's the secret word for this? The secret word, Johnny. Wink, wink, nudge, nudge. That's supposed to be a submarine. Battle stations, battle stations. Wow, no one's getting it. What's the secret word? Hammock. Hey, Johnny, do they actually have sirens that sound like that? I think of a company somewhere in the world that makes that siren, and they test it out, and there's someone there that says, no, that doesn't sound right. Like, that doesn't sound like a submarine. They're like, tweak it. Make it a little lower. You're like, oh, well, that's a little better. Quality control. It has to sound just right. Okay. All of them, Mohammed. Dive. All right, guys, you're beautiful. You're lovely. You're a wonderful person. And I thank you for being in my life. Thank you for being on my team. Thank you for being part of Forex.Today, being a subscriber and all that kind of stuff. Wicked awesome. We make the world a slightly better place. So anyways, so thank you for being here every day. And I hope you have a wonderful weekend. And I will see you on Monday. Make sure you go through all your trades over the weekend. Analyze all the things you did right and all the things that you did wrong. Create a list of 2 or 3 things that you want to improve on in the next few weeks and actively engage in improving. Don't just sit here and play Forex like it's a video game. Okay? It's like being a weekend golfer. You golf every Saturday for 30 years and you still generally suck as a golfer. All right? That's not what you can do. You don't want to do that as a Forex trader. It's not about showing up here, listening to me, and you're like, Oh, well, all that makes sense. Well, of course it makes sense. You can't watch golf on TV and become a better golfer. Okay? So of course it makes sense. Of course the golfers on TV are good. You're like, oh, man, when he hits it out of the sand, oh, man, that was 22 feet away. Ooh, he could do better. Dude, get in the sand. Swing the club. Okay? There's a difference. You're going to need to really practice and really, really focus. So you need to actively engage in the development of your skills. Get in the sand trap with a wedge, hit 1,000 balls. Okay, so now if you're not sure what I'm talking about, like, what do you mean analyze your trades and create a list? Dude, it's 1/3 of my book. Okay? So I obviously believe in practice makes persistence. And persistence might create consistency. Consistency might give you control, and control might give you confidence. I guess persistence gives you control. The control gives you consistency. Yeah. Anyways, and then confidence. And from there, you might have a chance. But like I said, I don't care what indicators you use. I don't care what moving averages you use. You could just totally trade a naked chart. If you can't come up with plan A, it ain't going to work. Whatever you're trying, what the other guy is doing on the other YouTube channel, it just won't work. If you can't set up price action type plays based on technical analysis, then, right, you remember your technical indicators are algorithms that help you do technical analysis. So you can get confused where you're looking at a rune indicator that it's telling you something. No, it's not. It's not telling you anything. It's another algorithm to explain what's happening based on price and time. You still have to understand the technical analysis is analysis of price over time. So you have to understand the importance of price and time. And the different various algorithms are just different ways of measuring price and time. But if you don't even know what you're measuring, cash flow, if you don't even know that, it's hopeless because now you're looking at the indicator to tell you what's happening, but that's not it's ass backwards. Okay? So instead, realize you need to be asking your indicators to give you the information you need to make an informed decision. Are you a bear or a bull? Technical indicators won't tell you that. That's fundamental analysis, macroeconomics, and monetary policy and fiscal policy. Great. So once you have a bias, what's the next level? You use your charts, your technical analysis of price and time, and you say, is this market, is the market bullish or bearish? If the answer is bearish, you're better off selling. But do you sell low? No, you sell high. What does that mean, sell high? At resistance. Okay, high price in a bearish market at resistance. Oh, well, I'm going to need some sort of indicator, an algorithm to do statistical analysis of the market to say price is overbought, it's been rising, and it's overbought considering we're in a bearish market. Or your technical indicator says, based on probabilities, this may be resistance. When you're trading like that now, you will improve. But if you're just trying every combination of technical indicators, you're going to drive yourself mad or broke.